So for those of you who don't know me, my name's Victoria Moffat. I'm the founder and managing director of LexRex Communications. LexRex is a specialist PR and communications consultancy focusing exclusively on legal services. We're based up here in Manchester. In a former life, I was a lawyer, but I've been in PR now for well approaching a decade. You might be wondering why we're doing these trusted partner events. Well, from speaking to clients and sort of the wider legal community, we're hearing at the minute cash is absolutely kind of the #1 concern and pain point for law firms. So obviously, having known Sarah for a while, it just seemed just a complete no-brainer not to ask her to come and talk to you all. So we're actually launching a survey on Monday to look at the other areas that are causing law firm leaders pain at the minute. So keep an eye out for that, because again, if you're here today, it's obviously because you want to know more about government-backed loans. So hopefully our research will show other areas that will be of interest, and we will be hoping to run further webinars in the next sort of few weeks and months. Anyway, that's enough from me. My role today is literally going to be hopefully to ask Sarah the questions that you would want to ask her, and find out all about the loan system as it currently stands. So Sarah, let's hear your introduction.
Right, okie dokie. So I'm a reformed bank manager, having escaped from the RBS group a couple of years ago. And before that, I spent my whole time looking after and lending to law firms, particularly during the last banking crisis. So I have quite a lot of experience of dealing with cash flow issues at pretty tough and extraordinary times. I do remember with some scars the failure of the property market at the last recession and the impact that had on law firms' income, and the fact that it was so dramatic. So I now work for myself, and I help and support my clients, which are all law firms, on their funding, banking, and general financial reporting and advice. So that's me, and I've spent the last 3 or 4 weeks speaking almost daily to a range of my former colleagues who now are spread across various banks, which has been very helpful. And I'm very pleased to say that I successfully got my first CBILS, or Coronavirus Business Interruption Loan Scheme loan, yesterday to the tune of £4 million, which is one of the largest ones that's been agreed so far. So yes, I've learned a hell of a lot about all of this over the last 3 weeks, and it's still evolving. And so I'm here to share what I found out so far with you today. So over to you, Victoria, to press the slides and ask me the first question.
Excellent, great, thanks for that. Oh, there we are. Forgot about that one.
Oh yeah, that was when I still had hairdressers that gave me hair dye. Sorry, I will get a better picture, or a new picture.
No, you look lovely. Okay, so the first question then obviously is, well, it's not obviously the first question, but it is the first question. What is this scheme? You know, what's it all about?
Right, well, first of all, to be eligible, there are 3 key criteria rather than the technical ones in terms of size of the business, which I'm assuming that everyone on the call is a £45 million turnover or below business, and that it trades predominantly in the UK, because your law firms, you work out of this country. So the 3 key things are that you've got to be a viable business before all this started, that the virus has had a material impact on your financial performance and your financial requirements, and that the cash you require is going to support your trading through these unprecedented times. So that's the key things. So yeah, so would you like me to go on to what the sort of features are?
Yeah.
Which is that there is the availability under the scheme for overdrafts, but every lender that I know so far that is lending to law firms and most other businesses, certainly the clearing banks, are concentrating on loans. So it's bank loans. The actual scheme rules are that there's no interest for 12 months and no fees. That's supported by the government. The maximum that can be lent is 5 million, and the maximum term is 6 years. For borrowings under 250 grand, absolutely no PGs can be taken under the scheme. And over that amount, the scheme rules are that the PG liability is capped at 20%. So they're scheme rules, they're not how individual banks are interpreting the or deciding how they're going to use their money. I think the key thing is these are bank loans. They're not grants, and they're not money that the government is putting into the banks. This is all being lent off the bank's own balance sheets. And that's quite important when it comes to the credit assessment, because they are lending their own money.
Okay, and is everybody lending? Is it you know, if
no, there's accredited banks and other lenders. There's currently, as of yesterday when I last looked, 40 to 45 lenders. All the main clearing banks are accredited on the scheme. And more recent additions have been some of the slightly smaller business banks, like the Co-op actually, and TSB, who weren't part of the scheme originally. The one standout that isn't is Handelsbanken at the moment. I understand they're trying to get on the scheme, but they're not yet. So most of the larger banks are on the scheme already. So they're the ones that you need to go to. And a lot of it is that there's obviously ridiculous strain on capacity. So all banks are only looking at their existing customers at the moment. They've just not got the capacity to look at any new propositions to the banks. So it's you have to go to your own bank first.
Okay, and I was going to ask actually, obviously lots of firms will have their own relationship managers, but what's the sort of situation if you don't have a relationship manager, or if you don't have a particularly close relationship?
Well, it is varying bank to bank, but on the whole, on their websites, there's the ability to actually apply for the loans directly on the website. Usually they just ask for a few questions to start with to qualify you, to make sure that you're actually eligible. And then you'll get some sort of response back. Now, initially those responses were taking some time. They're a bit quicker now. And that usually involves sending an additional form or application requirements to actually fill in more details. But at this stage, you'll be struggling to get through to them, actually trying to ring. Some of them have got web chats for inquiries, but I would suggest that you try and do the self-service application and try to start a dialogue directly with the bank through their applications online. They're struggling, and they're struggling with volumes. If you've got a relationship manager, they are absolutely your first point of call.
Okay, perfect. Well, that probably takes us quite nicely onto the next slide. In the sense of it's almost a combined question of sort of how do firms go about getting a loan, and then also following from that, and what information will law firm leaders need to provide.
Yeah. I think the key thing is that first of all, if you have got a relationship manager, they're all working at home, and they've all got huge numbers of inquiries. So I'd prepare sort of a list of questions that you want to ask them when you do get through to them. Obviously, one of them is asking them for the actual application form. There are very few that don't have some form of application form now, or some sort of standard email they're sending out with the information on that is required. Two, I would ask them what the current sort of process is in terms of time frame for that particular business, or for that particular bank. And also, if they know you quite well, or you've been borrowing from them in the relatively recent past, it might be worth asking them what their view is of how much you should be borrowing. so that you've got a little bit of a feel for what the current situation is, just to help as a guide, really. But once you've had that one conversation and you've got the application form, the key thing is to spend that time making sure that you gather all that information that is required, which the key things is that your last accounts, if the bank hasn't already got them, year-end accounts, and also the most recent management accounts, because what they've got to check is that you're actually viable, and you were viable just before this all happened. So that's key. And then forecast. You've really got to do at least 12 months forecasts, and ideally 2 or 3 year forecasts. But certainly the 12-month forecast needs to have some sort of sensitivity around what you think income's going to be like over the next 6 to 12 months, bearing in mind everything is really sort of finger in the air at the moment. So use your knowledge of the last few weeks and how that's been, and take a view. And what I would suggest is you do 2 or 3 different scenarios, especially in terms of income, say at sort of 80%, 60%, you know, maybe 40 or 50% of what your normal income is, depending on the type of your business. So you've got some sensitivities as to what the range of your lending requirement might be, to be able to come up with some sort of number to ask for, because you can't just ask for any old number. And there has been a recent trend of people asking for the 250 grand mark, because below that you are not allowed to be asked for a guarantee. And the banks are just rejecting those. In the first couple of weeks, the banks have rejected an awful lot of applications just because they haven't been substantiated, or the information's not been complete, and they haven't got the bandwidth, the resources to give individual feedback to all of those applicants. So they're just saying they're rejected. That is not the same as being declined. You know, they have not been through any sort of credit process. They just haven't provided the right information to be able to take it to the next stage. So that's quite important.
I'm going to interrupt you if that's all right, because that's thrown up quite a few questions for me. Yeah. And if anybody else has any questions at this point, then feel free to type them, because I think this is quite a meaty sort of bit of this session. The first question I was going to ask was around the financials and the cash flow statements, and you said, sort of, you know, it's sensible advice, isn't it? You know, to think about, we're just at the very start of this. We have no idea how things are going to look next week, let alone sort of 3, 6, 9, or even 12 months into the future.
Yeah.
So, you know, when you're putting together these best, medium, and sort of worst case scenario cash flows,
yeah,
would you be looking to submit those, or is that more as an internal audit sort of program?
No, I think it's important to submit them as well, so that it demonstrates that you've given this some proper thought, and that you know you're doing your best to predict things in a difficult situation. Because one of the other things you need to include with the forecasts is assumptions, key assumptions. So not everything, but you've sort of assumed that the furloughing finishes at the end of June, for example. If you've got people on furlough, you've made some assumptions about when you're going to have to pay tax back. And the reason that I've said that you should be forecasting well, you know, into next year, is that if you've deferred your VAT and partner tax, that won't be paid in July, that all comes to be paid next January. So certainly there's evidence that the ones that have already started forecasting ahead, based on the best information that's available now, this minute, they've been realising that they might be all right for cash until early next year. But by the time it comes to first quarter next year, they're actually going to be, they are definitely going to need some support. So they're already thinking ahead and looking at making an application for a loan to make sure that the money's good for next year. At the moment, this scheme is open until the end of September for applications. Now, given things that have been happening in the media over the last few, or announcements from the government in the last few days, particularly on last night's 5 o'clock briefing, suggesting that that we could well be in social distancing and not business as usual for months, if not into next year, I suspect that all these schemes are going to end up getting elongated anyway.
Okay. Right, so that's perfect. That's really insightful. And you've already sort of said what was going to be my next. You've already answered kind of what was going to be the next question, which was around. You said with the cash flows, you need to put in a sort of set of key assumptions. Now, I was going to ask, is with the cash flow, do we need to include some sort of narrative? Now, I'm guessing by the key assumptions that's the narrative section. That's where you explain.
Yeah. And I think when it goes to the narrative, that everyone's doing short form type applications to credit underwriters and everything. So being succinct, using bullet points, making sure that you just answer the questions that are being asked in the application forms is absolutely crucial, because this isn't a time for, dare I say, lawyer speak and lots of prose. This is about sort of effectively bish bash bosh, get the key facts down, explain your numbers, and absolutely just focus in on answering the questions they're asking.
Yeah, perfect. No, that's great. So Denise has asked a question, which is, can you reapply if you've been rejected and or stroke? Can you reapply if you've been rejected?
Yeah, absolutely you can, because the whole sort of criteria is evolving. And from week 1, when the government scheme said that if you could be lent on normal terms, then the bank should lend on normal terms and not on the scheme, that was taken away. And also the Bank of England and the FCA have been saying in no uncertain terms to the banks that they've got to pull their finger out and get lending on this, and that they've got to be much more pragmatic. And so there's definite evidence that they are taking a little bit more of a pragmatic view and making different decisions now than they were 2 weeks ago. So I think that I wouldn't try to resubmit literally just what you've done. I think it's important to look and see if possible, get feedback on why it's been rejected, but also use the knowledge that's been gained by the likes of me and other accountants and advisors as to what the key points are. So if you address the key points and resubmit with additional information, then you've got a much better chance of getting a better hearing the second time round. This isn't one of these sort of one strike and you're out type situations.
So it's a very it's quite a fluid situation, isn't it?
Yeah, definitely. It's evolving every day.
Okay, that's great. So just going back to something you mentioned a little while ago, you said, there'll be some firms out there who have a cash cushion, I suppose we'd say, which is great, exactly what you'd want. But, even their projections might show that, if things aren't significantly improving by, say, Christmas, that by January, even those sorts of firms might need to be thinking about this sort of loan. So although the scheme is supposed to end, I think you said in September, for those sorts of firms, is it worth getting that application in now, kind of preemptively, or what would be your advice to those sorts of firms?
I think they can take their time a little bit and plan it out better, because the other thing is that government have not put a cap on the amount that can be lent under these schemes. Now, individual banks, bearing in mind that this is lending on their balance sheet, might take a view on how much they want to lend on this. But even if they do, I think the government will then be pushing them again to say, no, you've got to keep lending, because in the sort of macroeconomic world, the quantitative easing, the fact that the Bank of England is making money cheaply available to the banks, the whole reason for that, and the fact the government is guaranteeing 80% of the loans, means that there isn't any reason for the banks not to continue to run the scheme according to demand. I think so the key things are that whenever you put up a proposal, there's three key criteria that is going to be tested against. One is the viability of the business. So that means that the focus has got to be on key financial information that proves that you are profitable and that you are capable of generating enough cash to service the debt. That the amount you're actually requesting, that is a sensible amount, and that the funds are needed to run your business whilst income is affected by the virus. And that the final and most crucial one is that you really have got that ability to pay. So there's a thing called CFADS, which is cash flow available for debt service. So one of the things all the banks want to know is what you're already borrowing, what are your financial commitments you've already got. And that includes HP, leasing, etc. And certainly the main banks are asking for some sort of schedule. So not only how much have you got outstanding, but what your monthly repayments are and when do they expire, so that they can judge that you've got the capacity when things get back to normal to be able to actually repay this loan.
Yeah. Okay. No, that's perfect. And actually, just a sort of similar and related question is, say if a law firm takes a loan now, in the expectation that things will get back to normal in, say, January, but then in January things haven't got back to normal, can they put another application in? Can they apply for more finance? Do we know anything about that sort of scenario?
Well, obviously, it depends on what happens with the scheme, itself, how long that lasts. But bear in mind,
that was a bit of a trick question. It wasn't meant to be. It just popped into my head.
but just bear in mind that whatever you borrow now, there are capital repayment holidays anyway, and there's no interest. The capital repayment holidays do differ between different banks and different offerings, but you're not going to have to make any inroads into any of that money. The other thing is that from the ones that I've seen so far, the drawdown terms, in terms of how quickly you actually need to draw the loan once it's been agreed, are still on the sort of terms that you'd have expected before this, which means that you've actually got 3 months to draw the loan. And in some cases, they've been extended and it's 6 months. So you can get an agreement approval to do it, but you don't necessarily need to draw it straight away.
Great.
But that's the sort of detail that you're going to have to find out a little bit further along the line, and it'll probably be different for different banks.
Okay.
So I think that it's a constantly evolving situation, and I would say that the important thing is to do your homework, get all your figures sorted, understand, roughly what you should be asking for. Ask for a sensible amount, but that means not too high and not too low. The other thing that I've been asking, I haven't got a definitive answer, but as long as you're staying within the £5 million cap and you can justify it, there's nothing to stop you whilst the scheme is open going back and asking for more. It just depends on how long the scheme runs for, really, beyond the September. So at the moment, you do need to put a request in before September. And it's got to be it's justifiable and underpinned by your forecasts and the assumptions.
Cool. No, that's great. Sorry, I'm just scribbling.
I know, I can see that there's probably lots of questions coming up.
No, don't worry, I've made a note of them. So number one, first question is turnaround times, approximate turnaround times.
That is something that I was going to talk about. They are very variable at the moment. There is still no trends. But over the last few days, I've been hearing of ones that have been done in 3 or 4 days. Now, that's approval, and they're just about getting to start drawing down. So they've been approved, and what I'm seeing happening is that you'll get something in writing to say it's approved, but then it might take a few more days to get the documentation and get all that signed up so it can be drawn. part of that is that they were still working at the back end of last week to actually get loan documents sorted out. And also, as part of all of this process, they've actually got to enter the information into a portal that the British bank has to sort of like approve the individual lender for eligibility for the scheme. So there's actually, behind the scenes, there's still quite a lot of admin and processing required to make use of the scheme. And then there's obviously the logistics of getting things signed, bearing in mind all the working at home and ability to scan, and traditionally most banks are expecting things on wet signatures, and in some instances there's still security required, particularly if it's a business that's not been a lender up to date. So there's no mortgage debenture, which is a charge over the company's or the LLP's assets and things like that. So they're trying their best. There's an expectation that from initial request, as long as all the information is with the bank and they can make a decision based on that information, is sort of 7 to 14 days to get in the hold of the money. Where there's an absolute urgent need, I have seen that banks are extending additional overdrafts to bridge the gap. And the other thing you've got to remember is, before you even start or worry about too much the getting hold of this loan, to preserve cash flow, you should be talking about getting capital repayment holidays on all your existing debt, for example. And hopefully some businesses will have the pressure taken off them some pressure taken off when they get the money in from the job retention support scheme, from HMRC for the furloughed people. So, and that should be happening next week if you've already gone on the portal or got your accountant to enter furloughed staff's details on HMRC portal. So there's quite a lot of things to help in short-term cash while you get hold of one of these loans.
Yeah, so presumably it's, if you do have that relationship with your relationship manager, it's worth kind of liaising with them so that they know, exactly if you are really facing financial.
Yeah, absolutely. And they are.
Talk to them.
Yeah, there is some prioritization going on. So, for example, if you're running a restaurant or a pub, or you've got a B&B somewhere or whatever, and you've literally got no income coming in now and haven't done for weeks, they're the people that are really being prioritized because they've got nothing. They can't pay anything. But we are seeing now more and more law firms getting loans agreed. So. They're catching up.
Cool. No, that's great. So another question is, when will banks be expected to start repaying these loans?
Well, actually, firms will be expected to repay them. It's varying a bit between banks. So some are offering 6-month capital repayment holidays. Others, it's almost automatically 12-month capital repayment holidays. The one bank that's standing out at the moment that's doing things slightly differently, because most are deciding on the length of capital repayment holidays on the basis of need and request. So some are almost automatically putting it onto a 12-month capital repayment holiday. Others, it's like 6 months is the default, but if you ask for more, you might well get it. But Yorkshire and Clydesdale, they've offered these as under 2 products basically. It's either a 2-year bullet repayment or a 6-month capital repayment, and then regular equal repayments over 54 months.
Okay.
So that basically those are the 2 options. So if you're a law firm and you're thinking that cash flow is going to be pretty squeezed early next year with the tax payments, then obviously the 2-year bullet sounds a little bit more appropriate, should I say?
It's an awful name though, isn't it?
Yeah. Well, Yeah, bullet repayments basically that you just pay everything back at the end of the 2 years.
Oh, we shoot you.
Yeah. No. I'm not saying that. You said that.
So right, another quick question is, can you draw down on part of the loan and then the balance at a later date?
Funnily enough, I asked that of someone yesterday, and they sort of said, well, on the basis that there's no cost of that money for the first 12 months, because the government's meeting the interest, and to keep things simple, I think at the moment they're just saying, no, you just need to draw it down.
Yeah.
But you don't necessarily need to draw it down on day one. You do have that, whatever the documentation and the individual banks say, how long you've got before you have to draw it down. You can leave it and draw it down a bit later, but on the basis that there's no interest to pay for the first 12 months, I think because of the demand on the scheme and they want to use standard documentation, it's worth, if you really are keen on only drawing it down in tranches, then it's worth talking to your RM right at the outset and say, is it something that I can request? But sort of general advice is, well, just take it. You know, if you get the agreement, just borrow it.
Yeah. Okay. No, that's great. And I have another question as well, which is, and I don't know, we might have sort of covered this, but I'll ask it anyway. Is it possible to take the loan and pay the whole amount back in say 6 months if basically if you don't need the money?
Yeah.
Or is there a penalty?
There won't be any early repayment penalties or anything. So if you find you don't need the money, then yeah, absolutely, you can pay it back when you like. Perfect. Yeah, just check. I'm pretty sure as long as you're doing it on a variable rate and you're not trying to fix the rate of interest, then as far as I'm aware, all the clearing banks, you just got to be careful. If you're not using a clearing bank, if you do go to one of the secondary lenders, they have typically charged breakage fees or early repayment fees. But all the clearing banks, I'm pretty sure their documentation, and certainly RBS NatWest, because I asked that directly to them, and several of the other clearing banks I've asked, there's no early repayment penalties on any of this, so you can pay it back whenever you like.
Super. No, that's great. Well, I think that's all the questions for now. But obviously, if anybody else has any burning questions, just stick them in the chat box. I just wanted to go back quite a few steps actually. To when we were talking about the cash flow kind of forecasts and the breakdown of outgoings and liabilities, and whether you can take sort of holidays from any of those liabilities. Yeah. Just to sort of briefly cover off actually creating those documents. Now I know that's not something that you would necessarily do, but where should and can people be going to for that sort of financial data?
Yeah. So if you've not ever done any forecasting before, I mean, the first stop would be your existing accountant. Then it is only a 13-week rolling one, but Armstrong Watson on one of their blogs has actually made available a template for a rolling 13-week cash flow forecast. Now, and if you do find that you need to go to another accountant to get help, I would suggest that if you want to go to one that works and knows with a lot of law firms, then Armstrong Watson's one, Moore and Smalley is another, PM&M is another. Baldwin's are being very proactive and have got banking teams that can do cash flow forecasts and things. Obviously, it does mean that you probably have to pay a bit. And also ask other law firms or other related business, some of your business contacts, if there's good accountants in your area that can help you with a cash flow forecast. I mean, some of it is, the requirements or expectation of the banks. Some of it will be driven by how much you're asking for and what size of business you are. If you're asking for a few $100,000, then they're not going to be needing or wanting huge amounts of detail or expect that because of the size of your business and your requirement. If you're asking for 2 or 3 million, then frankly, you've either should be doing fully integrated forecasts with profit and loss balance sheet and cash flow, or you should have an accountant that can help you do that for you. So, you know, it is all proportionate, and they are being reasonable, but as an absolute minimum, you've really got, for yourselves, for running your business in these sort of times, you need a cash flow forecast.
No, perfect. And also, I think it's worth saying at this point that none of those accountants that you've just mentioned are paying us to recommend.
No, they're just ones that I would recommend, or I know anyway. And there's quite a few others as well, but they're the ones I've just thrown in at the moment.
Yeah, no, perfect. No, that's great. Okay. So one of my other questions was the information that's required to put these applications in. Have we've covered a lot of that detail. Are you happy that we've covered all of the detail there?
Yeah, I mean, each bank will have a slightly different list, but I think that the key ones are your recent trading and your forecast based on these strange, curious times, and the assumptions, and just making sure you supply enough information to support what you're saying, without too much, because I wouldn't be throwing loads of extra information they're not asking for either, because frankly they won't have the time or the capacity to look at it anyway.
Perfect. Did you want to talk about the sort of points of difference between the various lenders at the moment?
Yeah, I think the key points, one is obviously the sort of terms, i.e. I've just outlined that Yorkshire Bank is taking a slightly different approach to the product as such as the loan, and length of capital repayment holidays, and possibly loan length as well. And I think it's key to manage, to sort of help point the bank in the right direction. You need to tell the bank exactly how much you need, what capital repayment holiday you want, and how long you want the money for. Bearing in mind that after the first 12 months, you will be expected to meet the interest costs as well. And that's the other point of variability, is the pricing, the actual interest costs. That will be done on the normal basis of risk assessment for your particular business. So evidence so far is that the pricing is not been materially altered from if you were going to borrow normally. So if you were normally going to go for a loan of whatever amount you've gone for in normal times, the pricing that you'll get for this facility will be very similar.
Okay.
And the other requirement is security. If you're an LLP or limited company, if you already borrow, that the bank will already have a mortgage debenture. As I mentioned before, that's the charge over the assets of the actual business itself, and they'll lend against that. And the main clearing banks, RBS, NatWest, Barclays, are saying that they're just not going to take any personal guarantees, no matter what size of facility you're asking for. The others are sort of left it open that they could take personal guarantees up to the amount required, as in 20% of the loan value, as is allowed by the scheme. But in actual fact, in reality, they're only doing those on exceptional requests, i.e. where actually they're being asked to lend really quite close to what their comfort zone is, and or the owners behind the business have got other assets that are not their own houses, that are really business assets that could be reached, and they might take a personal guarantee then. Other than that, all the banks are trying to avoid taking any new security because of the difficulties of execution, because of actually getting the charge and the delay that causes. So they are all being pretty pragmatic about security, but that will be slightly on a case-by-case basis. So in general, they're trying to keep it simple, but there might be occasions when businesses are being asked to give personal guarantees or other business assets that are not within the actual trading company. So that's the other thing. And the only other point of difference is really sort of the process, and how long that's taking, and some are better than others, and to be honest, some of it is dependent on how good your RM is. So if you've got a good relationship manager that's known you for years, then you're up and running. If you've got a relationship manager you don't know very well, or let's be fair, they're not very good, you're gonna have to work a bit harder.
Okay, no, that's great, that's super. Okie doke. Right, moving along. Right, so what should law firm leaders be doing right now?
Yeah, right now, I mean, other than preserving cash as best they can and making sure that they're taking advantage of everything out there to help preserve cash and keep collecting, keep billing, keep, relentlessly getting that cash in. The other things are to get all your information together and invest some time in pulling the information together and filling the proposal form in, or doing a lending proposal to back up the actual form, so that it is easy for the bank to understand. So avoid lawyer speak, and keep it so that the bank can understand it, and keep it really concise and focusing on answering their questions. So do a load of prep work. It's worth doing.
Yeah.
And then it's really down to remembering that when you're filling in the information or providing information, you've got to focus in on the fact that you've got to meet the viability test. You've got to ask for a reasonable amount of money, and you've got to prove that you've got the ability to repay it. And that's where a lot are struggling, is that they really do need to make sure that they focus on that they've got the cash to repay it in the future.
Perfect. No, that's great. Okay. So we're just on to the last slides now. So it's just really to round up whether you've got any further further advice, anything to add, really.
Yeah, I think two things. One feeds into the other. Make it really, really easy for your relationship manager to present your case, and make it really easy for the bank to say yes. And to do that, you need to provide all the information requested in one pack, in one go, and leave the RM a few days before you chase them. Because if you drip feed them, or if you spend all your time trying to talk to them, they can't get on with putting a proposal together to get it up to credit in the first place. Yeah. And they're all under an awful lot of pressure. The volume's huge. They've got the same operational challenges as the rest of us have got. So they are really trying their best to process all these requests and get the money out the door and keep their businesses going. But it is quite challenging for them at the moment, particularly as the whole process and everything is evolving literally by the day.